going to be the very last chapter that we are going to be going through. So believe it or not, we went through 13 chapters in almost 13 days. Yes, because we had one day for the exam. Oh, no, we didn't. We had one day where we had a day to review. Tomorrow's our review and then your exam. So we did it. We did all 13 chapters in 13 days because we also had to include the holiday. So with that being said, this is the last chapter. Chapter 14 is basically another case study. So if you have actually took a look at it before, chapter 14 is basically a second case study. So then you maximize all the things that you've learned from chapters 1 through 13 and you apply it all in chapter 14. So chapter 14 is basically another practice for you guys to complete. And I would encourage you to complete chapter 14 on your own because it's pretty straightforward. It gives you all the concepts that you learned from chapter 2 through 2 through 11 for sure. I know you don't do payroll in chapter 14, so let me revise that. It's going to be anything from chapters 2 through 9, I would say. It stops at inventory. It stops at customizing bills and stuff. I meant doing custom jobs. But as much as that, chapter 14 is a good, perfect example if you are doing this as a beginner. It is a lot harder if you are using your fictitious business because, again, you don't really have any other context besides filling in what you want to fill in, right? So that's why I said it would, second case I would actually practice would be utilizing Coffee Cafe because I don't want you to start from month 2. I want you to start from scratch, from the very, very, very beginning, from journalizing from day 1 all the way to the ending, which is the adjustments for and closing up the whole books and stuff. So I would actually Coffee Cafe would be a perfect one that you could use to exercise everything that you've learned from chapters from this book, entire book. Okay. Other than that, so here it is, the very last chapter here, chapter 13. It's all about adjustments and year-end procedures. Year-end procedures is pretty much when you're ready to move on or to close out your books, which we will talk about and what details go into that. But this is also looking at what happens when you need to close out at any given period, okay? So oftentimes what happens is that the more you keep adding to your QuickBooks, the more heavier the file gets and the more, it becomes super dense to the point where sometimes it's so much information is in there that you need to condense it or you need to just get rid of these old transactions and lock them up. And that's precisely exactly what we're going to be learning here in this chapter is that when you're completely done with everything, we're going to wrap it up. So this is going through basically the last, I would say, from steps of the accounting cycle, from steps 6 all the way to 10. Okay, so step 6 is I'll give you a little refresher, is doing your adjustment entries. And then step 7 is to do your adjusted trial balance. Step 8 is to do your financial statements. Step 9 is to close out your books. And then step 10 is to do your post-closing trial balance. So that's exactly what this whole section is about. It's mainly geared towards that last section in the accounting cycle. So a few things I'm going to introduce to you guys is going to be obviously the general journal. Okay. We're going to look at how we use the general journal. Now, we took a glimpse of the general journal in chapter 12 when we set up our company profile, right? When we created our company file, especially if you are not starting from scratch. If you are starting from scratch, then the whole section that I skipped on was entering the open balances. So in order to be able to do that, you're going to need a general journal to open up any balances. So if you create QuickBooks and you're in the middle of your accounting cycle, or you're using QuickBooks and your company has existed prior to that, and you're using the QuickBooks software to now manage your bills and your transactions, then that's where you need to use a general journal. But the primary reason you use the general journal is for the reason to make adjustments to your accounts. So what does that include? Recategorizing any accounts, any things that you have to do. So for example, every time if we have class active, right? If we activate our classes and we separate our expenses or our revenues based on our location, right? If we forget to do that, you can use a general journal to go ahead and place the information in the correct account, correct class, etc., etc. Another one is to, especially when we're dealing with prepaid accounts, where we make our adjustments to our prepaid accounts by allocating our prepaid accounts to their proper expenses. So, for example, when we talk about rent expense, right? You have to do prepaid rent, and every month goes by, you have to make an adjustment to validate that you are using the rent for this month. Other things too is going to be entering any year-end expenses, such as depreciation, right? Here we don't have periodic inventory, but we do have depreciation, right? If we're dealing with bad debt expense, which we again, if you are utilizing the allowance method, you do need to make that adjustment entry to transfer to allocate all the accounts in the allowance for doubtful accounts, and actually get rid of it through the bad debt expense. So that's an adjustment entry. And then other things too is like for supplies expense, anything like that. Okay, cost of material. All those things are going to be considered as part of those kind of expenses. Okay. And then, of course, closing out owner's withdrawal. In case you are a sole proprietor, you need to be able to do an adjustment entry there as well to reflect the correct number of the correct equity account. Okay. So that's what primarily the general journal is used for, okay? So all of these, and to place in open balances, okay? So with that being said, we're going to go ahead and dive right into how to create a general journal, and we're going to actually recategorize stuff in accounts. So in order to do that, we're going to go, there's only one place and one place only. You're going to go up to your company company menu. And you're going to go all the way down till you see, you're going to go to your company on your menu bar. You go all the way down until you see create or make general journal entries. Okay. There's only one spot and one spot only. Okay. Now, do you get this display message? Just go ahead and click do not show me. And here it is. All right. This is your journal, which we talked about before. I briefly went over in chapter 12 that yes, just because we're now learning QuickBooks, which essentially is trying to get rid of the general journal, that doesn't mean we are escaping it for good. You do have to utilize the general journal, and this is for more advanced level accounting. So this is the reason why we need accounting background knowledge, for us to be able to understand how to complete the adjustment entries that are needed to be done when you close out your books. Okay, so first things first is you always want to make sure that the date is correct, because as most adjustment entries are, they're either at the end of a given period. So whether it's weekly, daily, monthly, whatever it is, In this case, I believe it should be January, exactly 2 years ago, January 31st, 2019. Okay, I went over too much. There you go. January 31st, 2019. And what you should do is that you should have some kind of associated number here in your general journal. And I'm going to do 2019-1. Okay, meaning this is my general journal for 2019. Okay, there. Now, the next thing is that in order to keep track or keep record of your general journals, we're going to place them into a bank account. Okay. Now, it is up to you. You don't need to use this for any reason if you are pretty good at keeping track of your own journals. But they just teach it to you this way. So then when, for example, you need to look up a journal entry or you need to modify a journal entry, that you can locate it in a register and be able to find it and be able to reverse your transaction or et cetera, et cetera. Now, of course, you could do that by using this little previous and next button. However, if you do not create a journal entries bank account, what it is going to have is this account is actually going to be all the way at the bottom. Or, I mean, if you don't have this account at all, it's not going to keep track of your journal entries at all. So that's why they do recommend you to have a general journal entries bank account so you can go ahead and keep track of your adjustments, but also that you're aware of how many entries you've made so far. Okay, and I'll show you where to find them as soon as we finish our first journal entry here. So here we leave this whole part blank, okay, because we're just making sure that the journal entry goes through in the first place. Okay. I believe here we're for our notes here is going to say recategorize expenses. Okay. And here our first one is we're going to allocate a few of our expenses. So we have rent expense and we have utilities. Now, in this case, I accidentally placed that my entire rent expense included my utilities expense. So how I'm going to be recategorizing or remodifying this is by allocating a section of the money that went to my rent expense, and I'm going to allocate it to my utilities expense. So utilities is going to come first because that's one that I want to increase because debits always go first and credits go last. So make sure that you understand that. This also has to hold true as well. Okay, so you have your utilities expense and you have your rent expense. Okay. And I believe I need to allocate $25 and is it 65 cents? 60 cents? 25.
25.52.
25.52.
No, wait, sorry. 62.
Got it. Good.
Read this small writing, sorry.
No worries. I had troubles last time doing that too. So sometimes I memorize it. Sometimes it's so hard to work it out. But anyways, so here's actually something nifty that you need to know when it comes to QuickBooks. Let's say I accidentally fat fingered and I typed in 25.82, right? What QuickBooks is going to do is it's going to say, nuh-uh, you still have a debit of 20 cents. So it will not let you enter in the transaction if there is a discrepancy in your numbers. If there's see, as you can see here, it won't let me enter it in unless my debits and my credits match. All right, so what's really cool about QuickBooks is it prevents you to make the very first mistake in the first place. It prevents you to entering in uneven numbers in your journal. So that's actually pretty good, and it catches it right then and there. And it even automatically calculates, hey, you have a 20-cent difference. Make sure you know where this 20 cents is going to go. But in this case, if you do get this, what happens is you're just going to have to figure out or modify whichever one it is. And then if you do that, then it updates this as well, that you have 20 cents here. So let me clear that out and clear this out. Okay. So there you go. So once you have that, these zeros are nothing just because we don't have items there. So it's not going to affect anything. So you can leave those there. But that's what happens when you don't when you type in a typo, it's going to automatically recognize that, hey, this transaction is incomplete because you're missing so and so, or you have a discrepancy. Okay. And for this, apparently it can also utilize the copy and paste feature tool. So you can, to make it fill out your stuff a lot quicker, you can highlight it, copy it, Control C, and then paste it using Control V. Okay. So here it says to copy and paste the recategorized expenses. So once I look at this and my journal looks correct, I got my debits on my credits equaling on both sides. They're for $24.62. General journal number 1. Everything looks good. And I could go ahead and click Save and Close. Once I get that paper approval, now the question is, how do I actually locate my actual general journal entries? So again, I'm going to my chart of accounts, and I'm actually going to double click on my journal entries. And when I do that, there it is. Okay. I have my the one that we just entered in. Wait, is that right? Okay. So here it is, general journal right here. It says it's split. And then you can double click on it to modify it, of course. And here it lets you modify it right here. Okay. So it lets you know what has happened there, gives you the day, and etc., etc. And you can locate the general journal at any given time. So this is actually a new key feature that you should have for QuickBooks, just so that if you do, or when you do make your general entries, that you do have that bank account. Now, I don't know why it's considered a bank account. It just seems to be the most easiest because you're dealing with money. Because not only do we use it for this, we can also use it to also zero out our items as well, or we can utilize it to recategorize our items. And how we use that is going to be doing in another sense of a general journal. Now notice this, every time I make a general journal entry, okay, it says right here, it's accounts. There's no place for me to place my actual items in here. So this is exactly why the general journal is only for accounts, and it's for recategorizing or modifying accounts only. Okay, so make sure you understand that the general journal is strictly for only accounts only. Okay. Any questions in regards to this? Okay. Okay. Again, and you can also reverse a transaction. You can look in the past. You can clear them out, whatever you want to do. You can delete general journals. Okay. Okay. So that's the general journal there. Now, in order to recategorize items, we have to utilize a $0 check. Because if you guys remember, when we're dealing with checks, okay, so I'm going to go ahead and write a check. At the bottom of the window, you have two sections that you can modify. You can either modify as expenses, which are allowing you to modify your accounts, or here's the part where we're going to apply items. This is where you can recategorize your items here. So things like anything that we sell, let's say you accidentally sold a product or a service, but you labeled it as wrong. So as you guys remember, right? Every time I write photographer, it pops up as photo paper. That's a common mistake because sometimes when you do the autofill, you don't fill in everything, right? Okay, so that's exactly what I can use the $0 form for. Okay, so let's go ahead and show you an example. So we're going to go ahead and make a $0 check by first thing is we're going to make sure that we are in the correct account. So because we're making an adjustment to a specific item, which is affecting a specific account, and we're not actually creating or writing a real check, what you're going to do is you're going to select journal entries. You're going to get this window and you're going to say, yes, I am aware. I am writing a check out to my journal entries. So once you do that, okay, so this is another way of, because I'm placing it into my journal entries, this is in another sense of doing a journal entry, but this time I'm breaking it down to fixing or modifying my items. So I have to make sure that I place it here because I don't want it to affect any other revenue account if it's linked to it. Okay, so when I do that, first thing I'm going to do is who is going to be my vendor. So I'm going to go for this case. It's going to be Wong and Son. I charge them for something that wasn't supposed to be. And yeah, and I'm going to go ahead and write here so item. Okay. And this time I actually I think I charged them for a photo session instead of a photographer. Let me see.
It looks like it's a photographer and a retouching a photo.
Oh, retouch. Yes. Okay. So what I'm supposed to be doing here is I'm supposed to be placing it into the photographer item. But instead, I accidentally had it as a photo retouching services. Okay, hold on. I only have retouching on mine. I don't actually have photo retouching. Okay, yeah, that's right. Retouching, okay? So, now the values are different, okay? So, in this case, this is where I need to modify it, all right? I accidentally placed my photo retouching. This one is where I accidentally placed it when I was actually supposed to place it into the photographer. So this is supposed to be, this was supposed to be $95, while I'm actually taking away from my photo session here to be negative $95. Okay? So by doing so, I should produce a $0 check. Right? They cancel each other out. But what I'm essentially doing is I am crediting my photo session and I'm debiting my photographer. That's the initial idea here is I'm not recording another expense. I'm not recording another revenue. I'm just making an adjustment. I'm subtracting from my photo, retouching and placing it into my actual photographer. Okay. All right. And the date here for this one is, I believe the same thing, January 31st. January 31st, 2019. Check number, I think this one. Perfect.
2019 too.
Yes, that's right. It's going to be for whatever general journal that you left off on because this goes into the general journal entry. So there you go. This is how you make changes to and modify items. Okay, not accounts, items. Once that looks good, I'm going to go ahead and click Save and Close. Okay. So that's pretty much it. And then if I go to my account, my chart of accounts, and I go to my general entries, as you can see, I have 2 now. Here's the first one. Here's the second one, right? And if I were to double click on it, the check will pop up again. And this just basically, again, it just remodified, placed things in other places when they were originally supposed to be in their places. Okay. So this is how you can make your errors that you find, right? Instead of actually canceling something out, you can just transfer it using a general journal entry. Okay? So the difference between writing a $0 check is you're using items, where the general journal is only using accounts. Okay? Any questions in regards to the $0 check? Okay. All right, so we just did the $0 check. Let's see, the next section here is editing, voiding, and deleting transaction. As we know, editing transactions is so easy when you're using QuickBooks. Just because, one, it's a software program. Everyone makes typos. Everyone makes mistakes. It's a quick and easy fix to do. So as far as editing, you just need to know what you're editing and how you're going to be editing it. Most cases, especially when you edit items, one thing that you need to make sure is that you should only be able to edit things if you haven't sent them out yet. So for this special case right here, we're looking at an invoice. Okay? We forgot to tack on an additional photo session. Now, if we sent the invoice out already, then you're going to have to just create a separate brand new invoice charging for the other services, okay? So that's just the rule of thumb. You don't want to be that company that sends a million invoices because you keep messing up and never edit the first one in the first place. Or in most cases, what happens if you do send one, instead of creating another invoice, you're going to send the customer the original invoice with a voided amount on it, and then you're going to send them a new invoice that has the correct items and the details that are already on there. Okay, so that's rule of thumb. That's true for writing checks out, right? We talked about this when we did payroll, right? If there's an adjustment that needs to be made, general rule of thumb is you want to cancel the check, reissue a new one, and reissue a new adjusted timesheet / pay stub, okay? Same thing goes for... same thing goes for bills as well. If you made a mistake, you're just going to have to redo it, and etc., etc. Okay? But for this one example here, we're assuming that we created the invoice, but we haven't sent it out yet. General rule of thumb, that it is best to edit the stuff right here because you haven't sent it out yet. So therefore, you caught your mistake and you can fix it right then and there. So let's go ahead and take a look at this example here. Okay, so here we're going to create an invoice, or this invoice has been already created to Maria Cruz again, branch opening, and we forgot to include an additional 3 hours of outdoor photo session. So for this example, it says that we didn't know who it was, but we just remembered that the last invoice was created, we forgot to add in the photo session. Okay. Now, a lot of customers too, if you send them the wrong form, they'll actually come up to you and say, I thought I was being charged for this as well. Some cases, they're like that. Some cases are like, okay, I pay whatever I see. So, yeah. So if you click the last one, it shows up that Maria Cruz was the very last invoice. Oh, let me close this window. There you go. That Maria Cruz was the very last invoice that we've created, and this is the one that we wanted to edit. So again, editing it is so straightforward and easy. You just simply add stuff to the invoice. You just modify it. There's no need for anything else because, again, this is technology. You can add at any given time. You can edit. You can delete. You could do a lot of stuff here. Okay, so here we're going to add in the outdoor photo session. Okay, so right now she currently owes $276. We tack on 3 hours of the photo session. So therefore, now her new bill is now $561. All right, thank goodness we didn't write anything in the memo because now we have 3 premium packages. 3, let me do our outdoor photo session and 3 premium packages. Okay. And now that we've finished editing this, we can go ahead, click save and close, and then now it's going to give you, did you want to make these changes and save them? Yes. So now we can go ahead and print the invoice and send it off to their actual, to the actual customer. So then even if that, then when we come into going into the transaction, if I were to click on Cruz Maria branch opening, okay, I would see that the invoice is there. Oh, let me open this up bigger. So if I go to all transactions, here you go. We just modified 106. If I were to double click on that, here you go. My information has been saved, and that now the new bill is for $561. So just as easy as that, it is so easy to just come in and edit everything that you need. Right? Pretty straightforward. Not hard. Okay? And oftentimes, people who are not avid users of QuickBooks, this is common. People make mistakes, especially when typing in a lot of stuff. Okay? Any questions in regards editing? Okay? So the next one is going to be voiding and deleting transactions. So we talked about this. Our rule of thumb is to never delete anything in QuickBooks. Reason being is because it can allow us to accidentally create holes and a lot of discrepancies in our transactions. The only exception that you can delete a transaction if you just never use that account or that transaction has never been used before, that item has never been used before. That's the only occasion you can actually delete something. So, or for example, I created something and I was like, I don't need it anymore. I can't edit it. The day after, I could just delete it right then and there because I know I'm not going to use it. So what's the point of having it cluttering more space? You know, that's one name that could be used for QuickBooks, you know? So understanding that deleting transactions is not something that you want to actually do. However, voiding transactions is actually better, okay? Because voiding transactions, what voiding transactions does is it actually reverses the entry as if it never happened. Okay, now there are a few rules and guidelines when you do void something. For example, if you void a check, then obviously your bill is going to come back, your checking is going to be placed, the money's going to go back into the checking account, and so on and so forth. But if the transaction is led to be more like extensive after that, you may have to do an adjusting journal entry to actually fully void the transaction itself. Okay. But let me see, for this example here, usually, let me see, to void a transaction is pretty straightforward. You go to any transaction. Let's say someone wrote a check to me. I can void that by simply clicking on the actual, so for example, I want to void this invoice. I just go to view, edit at the menu bar, and I can click void this transaction or delete this transaction right here in void invoice. Okay, as so then I create this invoice and I pretend like it never happened. Okay, however, the rules with voiding transactions is you're unable to use the number again because the transaction still exists. It's just zeroed out and everything just is reversed from there. So basically, this is just basically a way to reverse your transaction without causing any other discrepancies besides, you know, besides any holes. But again, they do say that if you are in the current period, this is fine. But for any instances where you've already closed out the books and you are trying to avoid a transaction, you're going to have to compute everything. Like, start from square one. What I mean by that is like when you're doing the financial statements, you're going to have to redo everything because the voiding one transaction can lead to a chain reaction to a lot of things that could be affected. So voiding a transaction can be, not as, it's easy to do. It's just a click of a button. However, you want to make sure that you're positive and that you know what you're doing. Okay, so pretty straightforward. All of the transactions that you want to look at and you need to avoid it, you just go to the edit menu bar and you should be able to avoid the transaction. Okay, so in regards to an example, I don't think there is one in the book to void a transaction. Oh my gosh, I can't even read my own handwriting. No, there is no example on voiding a transaction. It's pretty straightforward as far as doing that. Okay. So the next section I'm going to talk about is going to be deleting transactions. So there's only one circumstance that you can delete transactions. And that is when you finish and you completed and closed out your books properly. Okay? That's the only time you can actually delete your transactions, is if you're completely done with your books and that's it, you're ready to move on, then that's the only time that you can actually delete it. So when we delete our transactions, I'm looking for it right now. There is actually a nifty feature that you can delete every single transaction, but still retain all of your lists and all of the settings and everything like that. And that's going to be called the condense and condensing the data file using the utilities option on QuickBooks. So I'm going to show you how it is. So when you are done, like I said, the more you keep entering transactions, you can't expect a file to hold a year's worth of transactions, okay? Because then as the file gets more and more heavy, the more transactions you keep entering in, the bigger the file gets. And the best way to actually chop it down or to even make it more easier is to when you decide what your accounting period is, right? Whether it's daily, weekly, monthly, or even quarterly. That's also how you can also determine that's how you're going to close the books. And that's where it's a perfect time to delete all your transactions and basically wipe out the QuickBooks, but retaining all your lists, all your preferences, and everything that you set here. So the only thing that's gone is your transactions, okay? So how to do that, you're going to go to your file, and you're going to go to utilities, okay? And then you're going to click the condense, where is it? Utilities, condense data, okay? Once you click that, the first thing it's going to ask you is, well, first, did you back up your file? And if you did, then your backup is fine. But another thing they want to do is they also want you to create a folder or a file to retain all of the information, because once you delete all the transactions, you can never place them back. You can only open a backup file or a previously data file. Okay, so that's what you got to do. Okay, you're going to set up a few things. Now, I'm not going to do it because if I do that, then all my transactions are going to be deleted, and there's a few more things I have to show you. So I'm not going to do it yet. Okay, but when you do this, it makes you save it first, or it makes you at least back up the company file first before doing this entire thing. And then you have the choice here. You can remove all transactions that you select from your company file, and or you can delete the whole everything that you see on here. Okay, so that is how you clean up your data file. Okay, and it's good that you do that because you don't want lingering transactions, especially if you are doing this on a quarterly basis. You don't want to have lingering transactions that happened 6 months ago, right? That makes your information not as current. It makes them irrelevant. So make sure that you understand how to use this feature. Okay, so again, when you use it, you're deleting every single transaction, but holding on to all your customer list, all your employees list, your vendors list, all your items list, and your chart of accounts. You're keeping all of that, and you're keeping all the preferences that you have here. It's just the transactions are going to be deleted. Okay, and of course, it's going to make your file a lot lighter once you've packed all that stuff away and deleted them. So again, rule of thumb here is if you do choose to delete them, you can never undo it. Okay? So make sure that you make sure that you close your books out properly and then proceed. Okay? Any questions in regards to